Imagine this. You've got just $100 in your pocket. What would you do with it? Start a business? Invest in stocks? Buy something that could make you even more money? What if I told you that with just $100, you could potentially make a fortune? Or lose it all? Sounds crazy, right? Well, 4 years ago, I set out to answer that exact question. I invested $100 into 5 completely different things, some risky, some safe, some unexpected, and today, I'm revealing the results. Stick around as I break down which of these 5 investments turned that $100 into something amazing and which one left me with next to nothing. Trust me, you're not going to want to miss this. Let's get into it. First up, we have individual stocks. This one's pretty exciting because with stocks, you can own a piece of a company you believe in. You could hit the jackpot or lose big, but it's a thrill. For the learning curve, I'd say it's high. If you want to be successful here, it's not just about picking a stock at random. You need to dive deep into a company's financials, its leadership, and the industry. It takes time and research, but if you're willing to learn, it can pay off. When it comes to passive income, stocks can be good. You can earn money through dividends, those regular payments companies make to shareholders, and if the stock price goes up, you can sell it for more than you paid. But not all stocks pay dividends, so you've got to be strategic. Now, tax efficiency, this is great if you use the right accounts. In the UK, you have stocks and shares ISAs, and in the US, Roth IRAs. These are great because they protect your profits from tax. But as always, you should check your own tax situation. In terms of risk, it's high. Back in the 90s, I made a lot of money investing in a few great stocks. But when the bubble burst, some of my other picks went to zero. It's definitely a hit-or-miss game. So what happened to my $100 investment in stocks? Let me remind you, I picked a random stock, Samsung. Now, after 4 years, my $100 investment in Samsung is worth just $67.72. That's a negative 32.3% return. But here's the crazy part. Had I picked Apple, Microsoft, or Nvidia, I could have seen returns of $170, $188, or $98. This goes to show that individual stock investing is unpredictable. You can hit it big, or you can get burned. So if you're new to this, consider practicing with a demo account first, like on Trading 212, where you can play around with fake money. Next, let's talk about REITs, real estate investment trusts. Think of them as owning a slice of a property without the hassle of actually buying one. It's like owning a tiny piece of a huge building, and you share in the rental income. The learning curve here is moderate. It's not as complicated as buying physical property, but you do need to understand how REITs work, how they earn money from rent, and what kind of properties they own. For passive income, this is great. REITs are known for high dividends as they're legally required to pass 90% of their profits to shareholders. As long as the REIT is performing well, it can provide you with a stable stream of passive income. Tax efficiency is also great. In many countries, you can hold REITs in tax-advantaged accounts, which helps you keep more of your earnings. When it comes to risk, I'd rate it medium. They're generally safer than buying a single property. But if the real estate market takes a hit, or if the REIT has trouble renting out its properties, you could see your investment drop. So, how did my $100 investment in REITs turn out? After 4 years, my REIT investment is now worth $98.59, giving me a small loss of about 1.41%. But I made back some money in dividends, which adds up to a small 10.52% profit overall. Not huge, but steady. Now let's dive into cryptocurrency. This one's got a lot of people excited and terrified. Crypto can offer massive rewards, but it can also destroy your portfolio if you're not careful. The learning curve here is moderate. It's not as complicated as people think, but you'll need to understand wallets, exchanges, and the blockchain. If you don't get this right, It could lead to some costly mistakes. For passive income, I'm going with moderate. Unlike stocks or REITs, crypto doesn't pay dividends, but you can earn passive income through methods like staking or yield farming. But both come with huge risks. You could lose your entire investment if things go south. In terms of tax efficiency, it's poor. Crypto isn't tax-friendly, and every transaction you make, even swapping one cryptocurrency for another, is considered taxable. And since you can't hold crypto in tax-advantaged accounts like IRAs or ISAs, you'll be paying taxes on any gains. Risk here is very high. Crypto is volatile, and its value can soar 1,000% one year and crash just as fast the next. It's definitely not for the faint of heart. So how did my $100 investment in crypto go? I invested in Bitcoin 4 years ago, and my $100 is now worth a mind-blowing $652.12. That's a 652% return. But remember, this kind of growth isn't typical. Crypto can crash just as fast as it climbs, so it's high risk and high reward. Let's slow things down a bit and talk about gold, one of the oldest and most trusted investments. It's a great way to protect your wealth, especially in times of economic uncertainty. The learning curve here is low. Gold is easy to understand. You can either buy physical gold like coins and bars, or you can buy gold ETFs, funds that track gold's price. When it comes to passive income, it's a zero. Gold doesn't pay dividends or interest. It's purely a store of value, not an income generator. Tax efficiency is good for gold ETFs. In countries like the UK, you can hold them in a stocks and shares ISA, which makes any profits completely tax-free. Physical gold can be trickier depending on the type of gold you buy. As for risk, gold is medium. It's often seen as a safe haven during times of crisis, but it doesn't have the growth potential of other assets like stocks or crypto. So there you have it. From stocks to REITs, crypto, gold, and index funds, we've seen just how different each investment can be. Some had huge returns, some were steady, and others were a little disappointing. But the most important lesson here? Start early. Even a small investment like $100 can grow into something significant over time, especially if you let the power of compounding work its magic. If you want to learn more about easy ways to make money online, I've got another video right up there for you. But before you click on it, make sure to subscribe and keep coming back for more tips on growing your wealth. I'll see you over in the next video.